Welcome back to our channel, where we dive deep into the world of finance and help you make informed decisions. Today, we're tackling a topic that's crucial for anyone considering borrowing money: the comparison between traditional bank loans and fintech loans. As we analyze both options, I encourage you to reflect on your own financial situation, goals, and preferences. Let's begin with liquidity. When you think about liquidity in the context of loans, you're essentially considering how quickly you can access funds. Traditional banks often have a more extensive process for approving loans. You'll need to fill out numerous forms, provide documentation, and wait for credit checks. This can take several days or even weeks. On the other hand, fintech companies have revolutionized this space with their streamlined digital processes. Many offer instant approval and disbursement of funds within 24 hours, or even faster. If immediate access to cash is critical for your needs, fintech loans might present a more appealing option. Next, let's discuss accessibility. Traditional banks typically have rigid criteria for loan eligibility based on your credit score and financial history. This means that if your credit score is less than stellar, or if you're a first-time borrower without an established credit history, you may find it challenging to secure a loan from a bank. Fintech lenders, in contrast, often have more flexible criteria. They may consider alternative data points, like your income, education level, or even your social media activity, to assess risk. This inclusivity opens doors for many individuals who may otherwise be excluded from traditional banking services. Now, let's delve into profitability. From a lender's perspective, banks usually provide lower interest rates compared to fintech loans because they have lower operating costs and can leverage their established customer base. However, if you're borrowing from a bank, keep in mind that they may charge various fees that could offset these lower rates. Fintech companies might offer higher interest rates but are also more transparent about their fees upfront. It's essential to calculate the total cost of borrowing from both options before making a decision. Ask yourself, what does profitability look like in the context of my specific financial situation? Risk is another vital factor to consider. Traditional banks are generally perceived as safer because they are heavily regulated and have been around for decades. They have robust systems in place to manage risk and protect consumers. Conversely, while many fintech companies operate under regulatory scrutiny as well, the speed of their processes may leave room for oversights. With some newer players in the fintech space not having the same level of experience or stability as established banks, you must weigh the risks carefully before proceeding with any lenders. Now let's touch upon psychological factors, an often overlooked element in the decision-making process when it comes to loans. For some individuals, borrowing from a traditional bank carries a sense of security and trust built over generations of banking relationships. There's comfort in knowing that your loan is backed by an established institution with a long-standing reputation. Conversely, others might feel empowered by the innovative nature of fintech companies that promise efficiency and convenience at their fingertips. The ease of online applications can be enticing, but ask yourself, does the convenience outweigh any discomfort associated with dealing with less familiar institutions? As we move toward our conclusion today, it's important to emphasize that there isn't a one-size-fits-all answer when it comes to choosing between bank loans and fintech loans. Each option has its unique advantages and disadvantages depending on individual circumstances and preferences. What works best for one person might not necessarily work for another. So I invite you to reflect on your own financial journey. Are you someone who values quick access to funds and flexibility? Or do you prioritize security and a relationship with an established institution? Think about what factors matter most to you: liquidity, accessibility, profitability, risk, or even psychological comfort. I encourage you to share your thoughts in the comments below. Have you had experiences with either bank loans or fintech loans? What were your takeaways? Engaging in this conversation could provide valuable insights, not only for yourself but also for fellow viewers navigating similar decisions. Thank you for tuning in today. If you found this video helpful or informative, don't forget to like it and subscribe for more financial discussions tailored just for you. Until next time, keep analyzing those options.